Hey everyone, welcome back to Corporate Decoder, the place where we sift through the corporate jargon so you don't have to. Today we're cracking open a filing from Nuveen, Arizona Quality Municipal Income Fund. And trust me, it's more exciting than it sounds, especially if you like unraveling investment strategies. Get ready to dive into municipal bonds and preferred shares and see what this fund is really up to. Let's find out whether it's a desert mirage or an oasis of opportunity. Alright, this document is a registration statement, essentially the fund's way of telling the SEC they might be selling some new shares to investors. It's like a permission slip to offer more of their investment pie to the public. They could be selling common shares, preferred shares, or even rights to buy those common shares. This particular fund invests primarily in Arizona municipal bonds, aiming for income that's free from both federal and Arizona state income taxes. They're looking to give investors a tax break while also providing a steady return. They're registering to sell up to 1.2 million shares in different forms. The details of exactly how and when they'll do this will come in later supplements to this document. They might sell directly, use underwriters, or go through dealers. The fund's main goal is to generate current income that escapes both regular federal and Arizona individual income taxes. Their secondary goal is to boost the portfolio's value by investing in what they consider underrated or undervalued Arizona municipal bonds. These bonds finance public projects and infrastructure. Now, it's vital to remember that this document itself isn't the whole story. Any specific offering will have its own prospectus supplement, which details things like the price, who's selling it, and any risks. The fund's common shares trade on the New York Stock Exchange under the ticker symbol NERZ. On April 8, 2025, the share price closed at $12.SOF, while the net asset value, or MF, was $11.27 per share. Let's look at how much it costs to run this fund. Remember, these expenses directly impact your returns as an investor. They list a maximum sales charge of 1%, which would apply if you buy shares in certain offerings. There's also a small fee for reinvesting dividends. The big one is the annual expenses, totaling 3.72% of the fund's net assets. This includes management fees of 0.97%, interest and other related expenses at 261.14%, and other expenses at 261%, and other expenses at 0.14%. That interest expense is something to keep an eye on, especially if rates rise. To put that in perspective, they provide an example. A $1,000 investment would cost you about $47 in expenses after 1 year, assuming a 5% annual return. Over 10 years, that costs clients to $403. Now let's dive into the financial highlights. This table is really useful because it gives you a quick snapshot of how the fund has performed over the past several years. Looking back at the numbers for the 6 months ended August 31, 2024, we see a beginning EV of 12.60 at and ending an EV of 12.60 cents. The net investment income was 0.117 per share. Distributions took 0.35. The expense ratio was 3.72%. This table breaks down the trading data, high and low prices, NIV, and the premium or discount at which the shares traded. In February 2025, shares traded as high as $12.07.28. The corresponding NAV to $12.17. It's crucial to remember that closed-end funds like this one often trade at a discount to their NAV, and the trading values confirm it. The fund's investment objectives and practices are detailed, focusing on generating tax-exempt income. The fund uses leverage through adjustable rate preferred shares, so they can invest more than their assets allow. This amplifies both gains and losses. Of course, there are risks involved with all this. Some of those include market risk, interest rate risk, credit risk, municipal securities risk, and of course that leverage risk we just talked about. The report clearly explains how leverage can boost income when investments do well, but it can also magnify losses if things go south. The filing describes the different types of shares they can issue, common shares and preferred shares. Importantly, the fund is governed by the laws of Massachusetts. KPMG was the auditor up until August of 2024, and now PricewaterhouseCoopers is taking over. We can also see some additional senior security supplemental data. For example, series of 2028 AMTP trade, and we see that the asset coverage is $265,540 per $100,000 share. Finally, and perhaps most importantly, the document makes it clear that this fund is not intended to be diversified. Keep that in mind. From what I see, this fund is betting big on Arizona municipal bonds. While that can provide tax benefits, it also concentrates risk in a single state. The high expense ratio is a definite drawback, eating into returns, and the use of leverage, while potentially increasing income, amplifies the downside. The fund's financial highlights show inconsistent performance, and the persistent discount TJ is a concern. Notable opportunity: if you believe in Arizona's economy and want tax-free income, this could be an option, but the concentration, cost and leverage mean it's not for the faint of heart. Ultimately, while this fund offers a unique approach to tax-advantage income, it comes with a hefty dose of risk and expenses. It might suit specific investors, but due diligence is essential. Thanks for tuning in to Corporate Decoder. Don't forget to like, comment and subscribe for more deep dives into the world of corporate filings. Until next time.